Hey folks, welcome to Monday morning. I want to do a quick update for you. I'm in a little bit of a quandary because I do a live update for my members of my private trading group and also for YouTube members, people that have joined this YouTube channel. And I put my exact positions up, tell you exactly what positions. I show you my live account trading positions. And I've just put that video out this morning. I want to make sure I add value to my members. So I don't want to give everything to the general public that I'm giving to my members as well, because they are paying for membership in my private group. But if you can't afford that, what you can do is join this YouTube channel. There's a button below this video that says join. And if you click that button, it's $7 a month and you get all of my live trade updates that are sent to my live group. But once a week, it's not all the trade calls and everything that I do, but at least you'll get an idea of exactly what I'm doing and you'll get all the other perks of being a YouTube member. It's not the same as a private group membership, but it's pretty darn good. And the button's just below it says join. Click on there. It's $7 a month and you get access to all the private videos that I put out on YouTube. Let's have a look at natural gas. Now we're long from 288. That's our average position. And what happened with this weekend rollover gap is that we actually gapped down below this rising trend line. Not only is it a trend line, it's also a channel line. So let's switch this to the daily chart. This is the actual long-term trend line and it depends how you draw it, of course. Now I've ignored some of these lows here and I've ignored those two lows there. I've drawn it from that low to this recent low, but you could adjust this trend line, of course, and swing it either way you want, and perhaps it's a little bit better if we bring it up closer. So that makes more sense. We broke down through the channel line there. It's also in confluence with the 100-period moving average on this day chart. We back tested it from underneath, a few candles, and then fell back down. This is the daily chart, and that's where we are at the moment with that little gap on the weekend rollover. There's the 200-day moving average. Now that's an important number or level because the price generally, as long as it's above there, is bullish. As long as it's below there, is bearish. We do swip and swap and chop and change and cut through it from time to time, but generally it's a good guide for bullish versus bearish. Let me just zoom out a bit. And you can see as long as we're generally above the 200, that's this purple line, we remain bullish. When we're below it, we remain bearish. We broke up above it in September this year, which was good, and we've remained above it ever since. So we're just coming back down to test it. So you could see this as a breakout through the 200, a move up towards the top of the channel, and then a revisit of the 200-period moving average, which is more or less what's just happened. Notice we've also got the 50% Fibonacci that we have not closed beneath yet on a daily basis. Actually, I lie, we did close fractionally beneath it on Friday. And then below that, we've got the 618 Fib, the 61.8% Fibonacci, just below the 200-period moving average. So anywhere in this range between $2.80 and say $2.55 to 60, that's the gap between the 50 and the 618 Fibs, is a good support level. It's actually called the golden pocket, or the golden ratio. If you study Fibonacci's and you understand them a little bit, you'll know what the golden pocket is, and we're right in it at the moment. So, do the golden pockets always hold? No, not always, because they're a little bit too obvious. It may be that we need to spike down below this 200 moving average and down to the 250 level, which is down here, which is actually the dividing line between the bulls and the bears. I'm going to use the 200-period moving average as the new dividing line. So that's roughly scrambling along around 255 to 257, 258. So that's the sort of cutoff point. My hedge on this trade is now at $2.67, so not quite below the 200-period moving average, and maybe it should be there. I'll perhaps reconsider that. But let's see how we go in this golden pocket, and we're looking for a move back up to this black line, which is this descending, pretty key level really, and then the channel top, which is this green line, and the previous recent high at around $3.60. So let's see how we go on natural gas. I'm just going to very briefly mention all the other stuff. I've gone into it in a lot of detail in the previous video for members, but we're long on VIX-Y. We have no positions on WTI or on Brent crude. We're short on London cocoa futures. We're short on sugar. Nothing on the 10-year yield. And Bitcoin, we went short at 42,100. That's turning out to be pretty good so far. We're already down to 41.5. That was a bit of a lucky trade, I suppose. We got it as it happened. But basically, it's just this technical pattern. We've got this expanding, not quite a megaphone pattern, but it's a sort of a broadening, rising wedge. We reached the top of that and we sold immediately as soon as we got there. I want to point out gold to you. Again, I covered this in the previous video, but gold, there's the spike high. This is a weekly chart on gold. We've got a weekly spike high, a massive candle. And if we look at this on the daily chart, you can see it's a huge daily candle. But we have created new space above us now. We've broken out to new all-time highs. We haven't held there. We've got a daily spike, which is dangerous. Got a weekly spike so far, which is dangerous. So I think we might have to pull back a wee bit. Now, I'm thinking of putting a stink bid in at 2,000, the big round number 2,000, simply because it's 2,000. It's a round number and it's previous support and resistance, and it's a key psychological level. And I don't think people would be expecting such a deep pullback. I think we could get that. I do know, however, that on this big burst higher, this massive move higher, there'll be a lot of FOMO bulls who got into this trade way too late and have probably been stopped out already. So very interesting trade on gold. Stink bid $2,000. That's what we're looking at. Nothing on silver or on copper, and we have a long position on URA. When it comes to stocks, we have a short position on NASDAQ. You'll probably see my comments on SPX 500 on Twitter and on my private group. That's the sort of pattern I'm looking for. I think it's a fairly low probability and fairly random drawing, really. It just looks good on the chart. But we do have this broadening pattern, and the broadening pattern is often a reversal pattern. So let's see if we can get a test of 4,400, maybe 4,420, maybe 3,380 before a bounce and a resumption of this uptrend. If this uptrend does continue, and the jury's still definitely out on whether these markets are going to carry on moving higher or not. Finally, when it comes to Forex, we're long on Euro US dollar, just holding there, not all that convincing, forming lower highs, so not actually totally convincing. And we've just taken profit on the dollar yen. We've still got one position left on this, but we've taken loads of profit on this move all the way down from 150, 160. Just taken a bit more, looking for another bounce to sell some more, and still looking at this sort of path here on dollar yen. So that's it, folks. If you've enjoyed this video, I'd really appreciate a thumbs up. And if you got some benefit from this video and you don't want to miss the next one, why not consider subscribing to the channel? Take care. Have a great trading week. I'll speak to you soon.